Regulations of Insurance Business by Nisha from MCOM Final, MPM Government First Grade College, Karkala. First one, Regulations of Insurance Business, IRDA, Obligations of Insurer to Rural Social Sector Regulation. Rural Sector. Rural sector shall mean any place or a area classified as a rural while conducting the latest decimal population census. The category of workers falling under the agriculture pursuit are under cultivator, agriculturist, worker in livestock, fishing, hunting, plantation, allied activities, etc. Next one, social sector. Social sectors includes unorganized sector, informal sector, economically vulnerable or a backward classes and other categories of person, both in rural and urban areas. In that first one, economically vulnerable or a backward classes means a person who live below the poverty line. Informal sectors includes a small scale or a self-employed workers, typically at a low level of organization technology, and other categories of person in the sense it includes a person with a disability as defined in the person with the disabilities means equal opportunity protection of rights and full participation act of 1995, and who may not be a gainfully employed, and also include a guardians who need a insurance to protect person or a person with disability. Next, obligations. Every insurer who beings to carry on an insurance business after a commencement of an Insurance Regulatory and Development Authority Act 1999 on 41 of 1999 shall ensure that he undertake the following obligations during the first 5 financial year pertaining to person in providing that in case whereon insurance company commence operations in a second half of the financial year is operation for less than 6 months as at 31st March of relevant financial year. So some points are there. No rural or a social sectors obligations shall be applied for the said period, and second one, the annual obligations as indicated in the regulation shall be reckoned for the next financial year, which shall be considered as a first year of operation for the purpose of compliances. In case where an insurance company commences operation in the first half of the financial year, the applicable obligations for the first year shall be 50% of obligations as specified in these regulations. Under that rural sector, in respect of a life insurance, 7% of in the first financial year and 9% in the second financial year, 12% in percentage in third financial year and 14% in the fourth financial year, and 16% in the fifth financial year of total policies written directly in that year. In respect of general insurance, 2% in the first financial year, 3% in the second financial year, and 5% thereafter of the total gross premium income written direct in that year. Next one, social sector. In respect of all insurance, in that social sector, in respect of all the insurer, 5,000 leaves in the first financial year and 7,000 leaves in a 7,500 leaves in a second financial year. Then 10,000 leaves in the third financial year, 15,000 leaves in the fourth financial year, and 20,000 leaves in a fifth financial year. Provide that in the first financial year, where the period of operation is less than 12 months, propriation percentage or the number of leaves shall be undertaken. Provided future that in case of a general insurer, the obligation specified shall include the insurance for a crop, So provide further that IRDA may normally once in every 5 years prescribed or revise the obligations as specified in this regulation. And third one, obligations after the sixth financial year. In that first one, rural sector. Under the rural sector, in respect of a life insurer, 18% of in the seventh financial year and 19% in the eighth and ninth financial year and 20% in the 10th financial year of the total policies written direct in that year. Next, in respect of general insurer, 5% in the financial year and 6% in the 8th financial year and 7% in the ninth and 10th financial year of the total given premium income written direct in that year. And next one is social sector. Under the social sector, in respect of all insurer, 25,000 leaves in the 7th financial year, 35,000 leaves in the 8th financial year, 45,000 leaves in the 9th financial year, 55,000 leaves in the 10th financial year. The obligations of the insurer towards the rural and social sectors for the 10th financial year shall also be applicable in respect of financial year thereafter. Next, fourth one, obligations of existing insurer for the financial year 2007-8 to the 2009 to 10. The obligations of existing insurer as one the date of commencement of insurance of the insurer Insurance Regulatory and Development Authority Act 1999 towards the rural and the social sectors from financial year 2007-8 to the financial year 2009-10 as under. So in that first one, life insurance, the life under the life insurance, a rural sector and social sector is different. Under the rural sector, 24% in the financial year 2007 and 8 and 25% in the financial year 2008-9 and 2009-10 of the total policy written direct in the that year. Next, social sectors, 20 lakh leaves in the financial year 2007-8, 2008-9 and 2009-10. Under the general insurance, the rural sector is 6% in financial year 2007 and 8 and 7% in the financial year 2008-9, 2009-10 of the total gross premium income written direct in the that year. Next, social sectors. For the financial year 2007 and 8, the average number of leaves covered by the respective of insurance in which social sectors form are financial year 2002 to 3 and to 2004 to 5 or a 5.5 lakh leaves, whichever is higher. For the financial year 2008 and 9, the obligations of existing insurance shall be increased by 10% over the number of persons prescribed for the financial year 2007 and 8. For the financial year 2009-10, the obligations of existing insurers shall increase it by 10% over the number of persons prescribed for the financial year 2008 and 9. And the obligations of insurance towards the rural and the social sectors for the financial year 2009-10 shall be also applicable in the financial year and thereafter. Next, fifth one, first one, the term leaves referred to in above regulations in respect of all insurers refers to human lives insured as at the end of each financial year. And B, reinsurance premium shall not be included while calculating the obligations of insurers in respect of rural and social sectors. The authority may be prescribed or revised the obligation as specified in these regulations from time to time. And the sixth one, compliances. For the purpose of these regulation, compliances with the obligations towards the rural sector in respect of both general and life companies shall be based on the sale product conforming to the provision that all such contract meet the stipulation as a minimum amount of cover as laid down in the schedule first and second of insurance regulatory and development, the micro insurance regulation 2005. And next, for the purpose of these regulation, compliances with the obligation towards the social sector in respect of both general and a life company shall be based on the sale of product conforming to the proviso that also such contracts meet the stipulation as to cover the laid down in the Insurance Regulatory and Development Authority micro insurance regulation 2005. And the seventh one, submission of return. Every insurer shall submit a return as a part of a financial return to be submitted under the Insurance Regulatory and Development Authority. Preparation of financial statement and Auditor's Report of Insurance Companies Regulation 2002, the rural and social sector obligations specified under these regulations and disclose the level of compliances achieved during the said year. Such reporting shall be form of part of the notes to the account. Thank you.